Hey, what's up everybody? In this video, I'm going to look at the stock of Etsy. Now, Etsy is an online marketplace that connects buyers and sellers, very similar to eBay. They make money on listings. You can list your items there. They make money on that. They make money on advertising revenue there. They also make money through selling shipping labels and other things like that to the sellers on there. So it's a very exciting company and I look forward to analyzing it. In the end, I'm going to give you guys my personal thoughts on whether it's a good time to buy Etsy or not. If you're new to the channel, my name is Dan. I do a lot of stock analysis on this channel. So hit that subscribe button if you want to see more videos like this one. Alright, let's get started. Alright guys, this is Etsy.com. You can shop here for lots of things, most notably clothes and jewelry. So you can click on any of these right now. Let's just click on this necklace here. And you can see here it's sold by someone named Caitlin Minimalist. So basically a lot of vendors have joined Etsy to sell things. You can click on their profile and you can see how many sales they have, their reviews and things like that. So it's really a competitor to, the eBay space and Amazon. If you ever sold things on Amazon, you know how ridiculous they are with their fees and how they don't really support their sellers all that much in my own experience. So, I think a lot of sellers will gravitate towards alternatives and there's a lot of market share here for Etsy. Etsy has a lot of room to grow geographically as well. 2/3 of the sales are in the US. They have a small presence in the UK. No other country accounts for more than 10% of their revenues. Okay, so here are some facts about Etsy's balance sheet. Their degree of leverage is, I would say, fair to slightly high, not overly high there, but you can see their debt ratios there. Their current ratio is above 4, extremely safe. That means their current assets can cover their current liabilities over 4 times. No issues there. Quick ratio is exactly the same as the current ratio because they have no inventory, which you would think they would have a lot, but remember, they don't actually own anything. They just host a platform which allows all the vendors to sell there. So they're not really taking any risk on the inventory, which is another nice aspect of their business. Interest coverage ratio of 10, cutting it a little closer than I'd like to see, but not really in the danger zone there, especially if those earnings are growing. We'll check on that later. They have a lot of cash on their balance sheet right now. I'm kind of curious as to why that is. 69% of their assets are just pure cash. Very interesting there. So overall, I like their balance sheet. I'll give it a B+. Here's a DuPont analysis for Etsy. So if you don't know about that, you can watch a tutorial video in the description below. But all I'm doing is looking at that return on equity and dissecting it into its 3 parts. So their ROE has been pretty consistent in the 20%, low 20s area. Really jumped up this past year, pretty amazing. Let's see what happened. One thing to notice is their net income margin, which has bounced around a little bit, is now about 20%. Pretty amazing margins for a company that doesn't really do anything. They just host a platform. I'm saying that as a compliment. It's very impressive. So that means for every dollar of sales, they end up keeping 20.2 cents in profit last year. Very impressive. Asset turnover is not that great. I would expect it to be higher for a company that doesn't need many assets. So it's around 1 recently. That means for every dollar of assets, they generated $1 of sales. That's okay, but I think they can do a lot better. I think it's being dragged down by the pile of cash on their balance sheet. I would love to see them do something useful with that cash. So margins, really nice. Asset turnover, decent. If you consider the fact that it's being dragged down by all that cash and you think it could be higher, pretty amazing business model. Here's a quick look at Etsy stock. It is up a pretty incredible amount over the past year, over 400%. It's currently trading at about 62 times next period's earnings. It does not pay a dividend right now. The short interest is almost 5%. It's worth about $27.5 billion according to the market. Is it a good deal? 62 times earnings is very high. We're going to have to see some good growth to make it a good deal. Okay, so Etsy has done pretty incredible growth, going from about $75 million in sales in 2012 all the way up to $1.7 billion in 2020, and very impressive growth over the past 12 months there, going from 2019 to 2020. Pretty amazing stuff. This chart right here is why I really like companies like Etsy with that network effect. As more and more people start selling their stuff on Etsy, it becomes more valuable. More and more people want to visit the site and shop. So it really grows exponentially, but your costs do not grow exponentially. Here are the number of full-time employees over time. And really, it's not very many for a company that generates that much revenue. So I really like to see that. Alright guys, so here are reinvestment needs for Etsy. You see in the orange I have capital expenditures. Very tiny amounts being spent on capital expenditures. Some years they don't even spend any money. This is not the kind of company that needs to do that. R&D expenses is the only major reinvestment. They don't really do acquisitions except for in 2019 they made a pretty major one here, costing them about $270 million. Otherwise, their growth has been very organic and not really requiring any big reinvestments. Now, going forward, we also have some pretty amazing growth expected by analysts here. We're looking at about 25% growth for the next year, followed by about 19, then 26, then 22. You get the idea. Pretty incredible growth expectations. I would note, however, that there is considerable risk with this company. For example, if you look at December 2024 expected revenues, the average is $4 billion. But look at the range here. Based on 8 analyst forecasts, the lowest is $3.12 billion, the highest is $5.29 billion. That's a very considerable difference between those two analysts. What if the pessimistic one is correct here? Hey guys, so at this point in the video, I'm going to use an intrinsic valuation model to value the stock of Etsy. I'll be using the free cash flow to equity model. Now, to make the model work, I need to estimate free cash flows for the next 10 years. I'm going to be using the revenue forecast to do that, and then I'm going to make some other assumptions of my own. I'm going to walk you guys through the whole process. So let's jump to the spreadsheet and see how we do this. Alright guys, here's the path I see for Etsy. We're going to go from about $1.7 billion in revenues all the way up to $9 billion in revenues in 10 years. Not unreasonable given their history and the size of the market they operate in. So to get there, I've plugged in analyst forecast data for revenue growth. That gives me that stream of revenue. Now to get from revenue to my profits or net income, I need to estimate some kind of net income margin. The margins meaning, how much do we get to keep? What percent of our revenue ends up as profit? So it was 20.2% most recently. For my initial estimate, I'm just going to assume it stays that way. If that is the case, I take my profits, I subtract reinvestments, and I will get my free cash flows. Now, reinvestment needs for this company are not going to be very high. They've sort of proven that over time with that chart I showed you guys. They don't really do many reinvestments besides R&D, which is already accounted for in net income. I've already subtracted that. So you notice they have pretty darn low reinvestment rate there. But with that in mind, let's see what the company's worth given these cash flows. Alright guys, so I got my free cash flows here, got my terminal value. Again, terminal value is that cash flow in that terminal year, divided by discount rate minus 2%, which is the perpetual growth rate. So if we take all of those values, discount them back to present value with an 8% discount rate, that is going to give us a total firm value consisting of these components. The total firm value ends up being about $20 billion, making the stock worth about $162 per share right now. Unfortunately, that is far less than what it's trading for. Let's revisit some of our assumptions and see what other people are seeing in the company that we are not. One thing to consider with Etsy when you look at those margins here is that their main competitor, eBay, has a net income margin of about 55%. So can they approach margins even close to that? Maybe they can. Maybe right now it's only the beginning. That is something to think about. So if we go back to our path here for Etsy, it seems like if they follow the path of eBay, they're definitely going to have bigger margins. Let's assume that their margins can grow. So I will say every year, perhaps they can grow by 2%. And let's do that for every year. So I'll drag that formula down. So at the end of the period, at the end of 10 years, their margins will be about 40%. So with that small change, let's see what effect that has on Etsy's value. Okay, so if we assume their margins can increase at that rate, we're looking at a total firm value of about $37 billion, or close to $300 per share, making Etsy a pretty good deal right now. Alright guys, here are my final thoughts on Etsy. First thought is to hit that like button. Really helps the channel. Thank you guys so much. Okay, but seriously, I really love Etsy's business. So just by providing a platform, that's all they do, they essentially generate tons of money. You got to charge people to list their products there. And once you have so many people listing products there, now you have advertising revenue. Advertisers are like, hey, wait a second, tons of people visit your website every day. I'll pay good money for my ads. So you got revenue coming in from those two streams. Plus they make money just by selling shipping materials to the sellers. So they're making a lot of money and the business scales up nicely. What I mean by that is it has economy of scale advantage. As they have more and more products listed, more and more sellers, yeah, the costs are going to go up, but they're not going to go up in the same proportion as the revenues will go up. You can already see this happening already. So really love the business. The discounted cash flow analysis is a bit of a mixed picture. If we're a little more pessimistic and we assume they can't grow their margins, it's definitely not a good deal. But if we can assume their margins approach the industry average, I guess you could say, approach eBay's margins, it's a really good deal. So it really depends if you believe they can do that. And what I mean by that is they're going to be growing revenues. Can they also increase margins at the same time? You know, typically that's not easy. If Etsy is able to pull it off, it's a really good deal. So I honestly have kind of mixed thoughts on it. It may need some further analysis there, but that's where I am right now. I think it's a tough decision. Let me know what you guys think in the comments below. Thank you for watching.